Welcome to Discovery Watch with John Kaiser.
John, one of your Discovery Watch companies, Uravan Minerals, fell sharply this week when it publicized the results of a hole it drilled in the Outer Ring project. What were the results, and why was the market reaction so negative?
Well, the market had high expectations that this ORX target, which was supported by a surface geochemical anomaly using the company's radiogenic lead isotope sampling method, coincided with what was believed to be a significant geophysical anomaly indicating an alteration chimney right from the basement to the surface. And when the company drilled the hole all the way to a 900-meter depth, first 100 meters was excellent. It was altered, just what they would expect at the top. But then it gradually transitioned into what we would call tombstone rock. In other words, no alteration, nothing there, no reason to believe anything is present. And management's conclusion is that this is very unusual, that there's no vertical extent to this alteration. It's somehow coming from the side somewhere. Clearly the geophysical anomaly is explained by the alteration at near surface, but there is no uranium deposit anywhere beneath this target. And they put it out in pretty disappointing terms, and the market, which was hoping that this would be a McArthur River discovery that takes this company with an $18 million valuation up tenfold, instantly sold off dramatically and drove it down. I think it's 7.5, 8 cents at the moment. So it was a high volume day, lots of people capitulating, giving up on the results, and to a large degree, there is concern. Well, this is the fourth time that the company has had drill programs that have delivered disappointing results, and the market is starting to wonder, well, maybe this innovative geochemical method is not really diagnostic in identifying deep, blind uranium deposits. And but in reality, what the results tell us is that the geochemical results alone are not sufficient. You need multiple support, and in particular, you need a proper geophysical anomaly, not one. And they did admit that the geophysical anomaly was somewhat different from conventional ones. I guess you need a proper geophysical anomaly in association with the geochemical anomaly. And the CMIC Footprints Project study that's being done on McArthur River, the rumblings are still coming through that the soil geochemical method used by Uravan is indeed diagnostic of the presence of deep buried uranium deposits.
After 4 disappointments, what do Uravan shareholders have left to look forward to?
Well, this year we had hoped that Cameco would drill the Stewartson project, where they drilled in the past couple years. They've twice drilled it. First, the Area A target, and in that case, they concluded that there is a uranium deposit present, but it's deeper than 1,500 meters and hosted in the basement, so it's not a realistic target to pursue because that's too deep to exploit. Last year, they drilled the Area B target, and with 2 holes, they couldn't quite get to the area where the geophysics said was the best potential because of marsh and swampiness access problems in the summer. But those 2 holes confirmed that, yes, there is an alteration system present. It even intersected a short interval of 0.02% uranium, so there's definitely uranium as part of this hydrothermal system. But Cameco decided this year not to drill this target. They have until April 2018 to spend another $1.5 million to vest for 51%, which then would allow them to go to 70% by spending the next $15 million. Cameco, of course, has its tax problems. It's in court right now arguing that it does not owe $2 billion in taxes, that its transfer pricing strategy was legal. What the outcome of that is, we cannot tell. However, uranium this past week dropped to a 10-year low of $22.50 a pound. So the uranium producers are not doing very well. So the company is now hoping that Cameco will say, okay, you can have this back. If you find something, we can always farm in again down the road, since we are the de facto developer of major new discoveries in the Athabasca Basin. So either Cameco say, no, we are going to do it, we're going to drill 3 holes next year on a much higher probability target than Outer Ring was this year, or you can do it yourself, in which case the company, as soon as it knows this, has to go to work developing the target, attracting audiences, raising $1 million, and they'll have until 6 months to get that job done. And they're in pretty good shape. They have $400,000 working capital left, only 46 million shares fully diluted, priced at less than $5 million. To put that into context, out of about 1,200 venture-listed resource juniors, 75% have less than $200,000 working capital. So the company is still in great shape. It's alive and well, but it's tough when people had high expectations and it is so brutally shattered by a single drill hole.
Another Discovery Watch company, Independence Gold, reported results this week for its summer program at Boulevard Project in Yukon's White Gold District, but the market somehow seems unimpressed. What are the results telling us?
Well, the results, there were 16 holes drilled in the Sunrise and Sunset target. It is a substantial gold arsenic anomaly. There have been holes in it in the past. Some are low-grade intervals. Some you get decent spikes, 4 to 6 grams over a couple meters. What the company is looking for are high-grade structures within the host rock that could be developed as a milling-type mine. It is a sulfide system. It is unlike Kaminak's coffee system, which is oxidized quite deeply, and therefore it's amenable to much lower cost heap leaching. The results had a few half-decent intersections, but the rest were sort of low. The holes are still too far spread apart to really tell us where is the structure, where do we have a discovery that we need to now delineate with focused drilling. So the market has kind of sagged. There's no big sell-off in this case. The company has $6 million working capital, only 60 million shares fully diluted. It's got a strong management team. It's now sliding into that sort of 10 to 20 cent range, where what I would call bottom fishing season. And it remains to be seen if they go back. They do need to go back with a much closer spaced grit drilling program so that they can properly identify the structures that are controlling the gold mineralization and see if they can put together a resource that can be developed. But some of the bloom has gone off this target, and by next year the enthusiasm for the White Gold District that the Kaminak takeover generated this year will be somewhat diminished.
Discovery Watch with John Kaiser continues right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. I'm Jim Goddard. Ivanhoe Mines reported an amazing new copper discovery in its Kamoa project called Kakula, yet the market reaction was quite modest. What gives?
Well, Ivanhoe Mines is already a substantial company. It is Robert Friedland's Southern Africa deposit company. He has 3 major projects. There's the Platte Reef project that produces platinum palladium from a very substantial deposit in South Africa. It has the Capuchi high-grade zinc deposit. The grade is so high you can't even get higher than the grade because the rest of the key zinc mineral is iron. But the absolute star of his portfolio is the Kamoa project, also in the DRC Congo, as is Capuchi. They discovered, this was a grassroots discovery made in, I believe, 2008. It is a billion-ton deposit of about 2% copper, an absolute monster deposit. It's in the Central African Copper Belt, and they've put out economic studies on that, and we're focused on developing this deposit when additional exploration on the same property, but a small distance from the Kamoa deposit itself, they discovered the Kakula deposit, and they just reported a resource of 300 million tons of combined indicated and inferred, ranging from 2.7 to 3.4% copper. That's 20 billion pounds of contained copper. That's $40 billion worth of copper at the current price. It's been ranked as the 10th largest copper discovery in the world. And you would think, wow, this is incredible. The stock should go up significantly. Now, the company is already priced at $1.6 billion. And the problem is the market is imposing a discount on these projects because they are located in the Democratic Republic of Congo. And contrary to its name, the current president, Kabila, appears not interested in stepping down after his two-term limit. There's supposed to be an election going on right now. He has not called an election. His support comes from Rwanda's Tutsi-based regime. There is now considerable civil unrest in the DRC. There's the expectation that there will be another civil war and that the Congo will go up in flames as it did in the early 90s, and when its supply of copper and cobalt ground almost to a halt at that time. So, fantastic discovery, but it's simply the market's unwilling to assign the value that this deposit would deserve if it were in a jurisdiction such as Canada.
The risk of the DRC falling apart did not stop the Chinese mining company Zijin from buying almost 50% of Kamoa for $412 million earlier this year, and there's rumblings that Ivanhoe could be taken over. Why would anybody consider doing so now rather than wait for the dust to settle down the road?
Well, the Chinese have the ability to negotiate with any regime in the world. And one would think, okay, they should just sit back and wait for the dust to settle, and the new regime that takes over in the DRC confiscate all the assets that were handed out under the old regime and deal with them directly. However, the Chinese entity, Zijin in this case, they want legitimate title in the eyes of the rest of the world. So if they were to take out Ivanhoe Mines now at, say, $3 or so, in essence, putting up, $2.5–3 billion value on the company, and then all of a sudden everything falls apart in the DRC, they are patient people. They would own 100% of the project. They could just sit back and wait, and then negotiate with whomever is there afterwards. And since they have the ability to make parallel investments in places like the DRC to encourage the cooperation of the authorities with regard to a mine, something that Western corporations cannot do because they're all independent entities that have to get stuff accomplished through their own devices, they can be quite confident that they will get copper supply coming out of the Congo in the next 10 to 20 years, and these two deposits, they will that would be a very strategic asset to have a major stake in.
If Robert Friedland sells out Ivanhoe to the Chinese, what happens to his so-called green metal story?
Well, I have a suspicion that he will simply become a more prominent player in clean tech holdings. This is a company that was Australian Stock Exchange listed. It was involved in various environmental cleanup services when he invested several years ago. He's very keen about the idea of mitigating pollution and so on. However, selling environmental services to the Chinese is not going to be a hugely profitable type of story. However, one of the things that he managed to accomplish in late 2014 was to transfer one of Ivanhoe's assets, the Syerston Nickel Cobalt project, out of Ivanhoe into Cleantech for a mere $1 million worth of Cleantech stock and a 2.5% royalty. And the pretense under which this was done is that it requires some special technology to recover the various metals in the Syerston deposit, and the Cleantech people have this ion exchange technology, which Friedland felt, well, this would be ideal. There's no value that Ivanhoe can get out of this asset, whose nickel cobalt grade is very, very low in any case, and so the deal was done. And lo and behold, within months of transferring the asset, Cleantech reported a world-class scandium resource. Because what had happened in 2014, Friedland became aware of scandium. And Friedland's big pitch these days is green metals. Metals that go into technologies that ensure a cleaner future, whether it involves lower carbon dioxide emissions or other noxious fumes that pollute the air. His talks always talk about the problem of pollution, that existing technologies are going to just drown the world, and that we need to have new technologies. And he believes in technologies such as hydrogen fuel cells, for which platinum group metals are important. He believes in the electric car future, because and these of course require a lot more copper than ordinary combustion engine cars. And he's on the hunt for metals for which demand is going to go in the future. And of course, right now, electric cars use lithium-ion batteries. He doesn't really believe in the lithium-ion battery because he believes in the hydrogen fuel cell. However, it's clear everybody is using lithium-ion batteries. And the thing about lithium-ion batteries is they require for the cathode nickel and cobalt, lots of it. And so this cobalt's become one of his green metals. And of course, scandium, it's not involved with electric cars at all, but what scandium does with aluminum is it makes it much stronger, amongst other properties, and which enables you to use a lot less of it. And in the transportation industry, reducing weight is the key to reducing pollution, to reducing fuel consumption. The aerospace and automotive sectors are on the sidelines waiting for an aluminum scandium alloy to become a reality. And with this world-class Syerston asset, it turns out it's the donut around the worthless nickel cobalt hole on which Ivanhoe had spent $30 million demonstrating that it wasn't so feasible to develop at the nickel and cobalt prices that we ended up with. So this thing now, world-class asset, they've published a feasibility study for it. They are awaiting permitting for it. I wouldn't be surprised if Cleantech Holdings becomes his new flagship after assuming Ivanhoe gets absorbed by the Chinese.
What makes scandium a green metal?
Well, originally it wasn't really a green metal. The Soviets had a deposit in the Ukraine called Softy Vody. It was part of an underground iron mine, and it had 100 ppm scandium ore in it. So they extracted this, and their scientists put a lot of work into developing aluminum scandium alloys, and this went into their military system, their MiG fighter jets. Now, of course, today's New York Times has this funny article about how their current MiG-31 fighters are actually inflatable balloons filled full of hot air, which the Soviets are popping up everywhere in some sort of effort to deceive American radar and satellites from recognizing these planes. But the joking aside, after the Soviet Union collapsed, it was not feasible to mine this scandium ore, and the world kind of just settled down, giving up on scandium because it's fairly low grade. It doesn't concentrate well, and that's where about 8 years ago, when these deposits in New South Wales were recognized to have an unusual enrichment in scandium, And one of the companies that has also pushed it to a feasibility study stage and is now awaiting permit for it is Scandium International with its Ningen deposit, which is north of the Cleantech's Syerston deposit. And these deposits have grades of 400 ppm or better. They're laterites. In other words, a weathered surface material. There's no, big open pit mining costs. All you have to do is develop a flow sheet that will recover the scandium, and it basically takes acid and heat to get the scandium out of the rock. And at 400 ppm, it's feasible to sell this material at $1,500 to $2,000 per kilo, where it is practical for aluminum end users to incorporate it and make a much better aluminum alloy than they have currently available to it. So it's with this recognition that this can go from a 10, 15 ton a year market to 1,000 ton per year as everybody adopts aluminum scandium alloy. This is now in a sense, the big new discovery in the market, and Friedland has emerged as the champion of it in his last couple talks. He's pounding the table on it, and he's pushing hard to get the Syerston project approved so that he can develop the world's first scandium mine.
Where do Ningen and Syerston stand in the permitting effort?
Well, in Australia, there's a process whereby you have to file an environmental impact statement, and then that gets processed by the permitting bodies. And if they are happy with everything, they issue what is called a development consent. Now, that's not the same thing as a mining lease. However, it's 90% of the way there. It means that all the primary objections have been overcome, and it's more of a mechanical process of getting all the paperwork done for the final mining license. Now, the Friedland Syerston project secured a development consent in 2001 for a scenario. Friedland took it over from the Australian company in 2004, redid the feasibility study, and applied for a modification to the development consent, had it granted, and since 2006, this nickel-cobalt resource has had a development consent, but there's been no reason to push for a mining lease, because when you get the mining lease, you have to build this project. However, with the discovery that the Syerston scandium-only portion of the system, which literally surrounds the nickel-cobalt resource, it's a much smaller operation, so he has applied for a modification of the development consent so that he can start the sprint for the mining lease. In the case of Ningen, shortly after they published their feasibility study in April, they filed their environmental impact statement and have been pushing the Ningen project through the New South Wales permitting process. They do not yet have a development consent. Once they get it, then they also start the sprint to getting a mining lease, and they have in their reports suggested that they hope to have the mining lease by the end of the year. Friedland, in his latest report, has also indicated that they hope the modification will be granted by the end of this year. So if all goes well for both companies, both of them will have hopefully the Scandium International guys have their mining lease by the end of this year. Friedland has his development consent and his mining lease by the second quarter of 2017. And we have two primary scalable world-class scandium projects heading into production, and that will have a big impact on the way the world uses aluminum.
Why does Robert Friedland describe Chilean copper mines as old ladies lying in bed waiting to die? Is there room for juniors to have any success in Chile?
Well, Friedland, of course, is promoting Ivanhoe Mines, which has these incredible 2 to 4% copper deposits. In fact, the Kakula deposit has grades in the 7 to 9% range. Just absolutely stunning. The Chilean copper mines, they're better than the Canadian ones. They're in that sort of 0.8 to 1.5% range. When Chile came on stream in the 80s, they gradually emerged as the world's largest copper supplier, thanks to these big copper porphyry deposits. However, many of these mining operations are reaching the end of their life, and the current government, which has a lot of social programs that it needs to fund, it has not been allowing Codelco, the state mining company, which owns most, or at least part of most of the Chilean copper mines, to use the capital from the cash generated by the copper mines to expand the plants, to even sustain them, to keep them operating. So there's a huge $20 billion plus bill facing Codelco to upgrade its mines, or they start to wind down. And another problem with Chile is that the country, all the land is owned by private parties, by families, and so on. So it's very tough for juniors to get into that country and get title to something without doing an onerous deal on land that is owned. And this creates a problem for generating new discoveries, because if there's no exploration capital going into the ground, you won't find new, relatively easy to develop deposits, rather than having to go underground with the existing deposits. And another thing that's kind of gone wrong in the last couple years is that the mine permitting body has for some reason become very dysfunctional in making decisions and getting approvals done. And this has really slowed down the speed with which anything gets done in Chile.
My understanding is that Coro is focused on turning small existing copper oxide deposits in cash flow opportunities. Is Marimaca something new?
Well, Coro Mining was one of those rare companies that decided we can play with the big boys in Chile. And about 3-4 years ago, they decided what they were going to go after were the smaller, sort of leftover copper oxide deposits that were too small for the big guys to do anything with. And their idea was to turn themselves into a cash flow generating operation. And they did secure a project called Berta, and then they got hold of the Nora plant, an SXEW plant. And in the past year and a half, they've invested $11 million getting these two projects up and running. They're forced to truck the ore from Berta to the Nora plant 50 kilometers. They commissioned it earlier this year. But when they started this whole thing, copper was $3 a pound. Now it's down there at $2 to $2.20 a pound. Their cash flow assumptions have been demolished. Their commissioning has been slower. They've had to acquire ores from different other projects to feed it while they get the Berta permitting, which of course has been slower than expected, done. And so their recoveries have been weaker because you're blending ores with different metallurgical characteristics. And the sort of sense was, well, this was a great effort, but unless copper goes back to $3, this is not a reason for investors to get excited about Coro. However, in 2014, they had also auctioned 75% of the Marimaca project farther north. And but they couldn't do anything with it because they didn't have the money. This is a system which is known to have decent grade copper. It's got artisanal workings on it. It's got small holds. It's been in the possession of a family for the past 20, 30 years. And this past year, in April, they finally got the go-ahead after attracting a big backer in the form of Greenstone Capital, which has put like $11 million into the company in the past few years, now owns 50%. They got the go-ahead to do a 20-hole drill program in April, and lo and behold, they get fantastic intersections down to 200 meters. It's oxidized all the way. The grades range from 0.4 to 0.7% copper, with grades up to over 1% in the various enrichment zones. And it's a footprint for 50 to 100 million tons of roughly probably 0.6% copper, of which 75% is probably recoverable through heap leach SXEW strategy. And so they hope to have a resource estimate out before the end of the year. You can do your back of the napkin calculations. But one of the things that they have done to kind of make this a cash flow situation is they've done a deal with a Peruvian company on the old Ivan plant, which is no longer operating. It's on care and maintenance. So for $6.5 million US, they get to buy this subsidiary, and they hope to develop the ore, have out a feasibility study sometime next year, do all the crushing and basic work on the site, and then truck the pregnant liquor solutions, the concentrate in liquid form, to the Ivan plant, and then expand that plant. So this discovery, which was just a sort of like a surface, a zone of known surface copper mineralization, has turned into a substantial discovery. It's not a $500 million monster, but $50 to $100 million ton discovery for a little junior like Coro, with about 450 million shares issued, trading at 10-12 cents. This is quite an accomplishment, and so this is our addition this week as a Discovery Watch Junior, whose discovery has not yet been fully recognized by the market.
Do you own any Coro?
I used to own Coro. I participated in a private placement several years ago, and then when copper collapsed, I said this story of generating cash flow from these small-scale things, not very interested, so I'd sold my stock for a loss. However, I still do have warrants from that private placement, and this Marimaca discovery got me excited that, hey, I'm going to make money from this. And because they will not have big capex to put this thing into production, this should be we should be able to get much better valuation in the market if the numbers that they deliver support the expectations.
John, thanks for the update for Discovery Watch.
It's been a pleasure, Jim.
We've been chatting with John Kaiser. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.